Welcome traders, hello, welcome. It is Sunday the 15th of May and I'm recording this for the week commencing Monday the 16th of May. So let's kick right off and have a look at a few of these things. So first of all, the reason I decided to update the fundamental slides is because it's noteworthy just that the US inflation for the month of April was actually at 8.3. So the reason I bring that up is because I'm monitoring the curve, that, you know, the sort of angle of momentum, and to see it at 8.3 for now, even if that's a pause, is still a good sign. No matter which way you slice it, I think it is a good sign. Next up is obviously Russia against Ukraine, still ongoing, still essentially waiting for clarification on that. And obviously, it's costing both sides, and it's a we just have to see ultimately how that's going to go and make sure that Ukraine is supported. And this is essentially because, leading to my next point, we have the world. We went through 2 world wars for this, and now we've got the kind of and I don't mean to be dramatic, but I do have to highlight this because I think for the first time since World War II, we have a global kind of threat that we need to be aware of, and a lot of people aren't. Most people don't blame them, not interested in the news, but we need to be aware that we've kind of settled into pro-democracy and not an anti-democracy. And so an example that would be Russia versus Ukraine, and within the US there's really a 2-party system. The Republican Party, which back in the time of Reagan was relatively reasonable and sensible, has kind of become extreme. It has become a home for white nationalism, and this is a real problem, and there's just some bonkers stuff going on there right now. So I just bring that up because November is a really, really crucial time for the US. If they lose, and it could be as the result of just a normal kind of, I doubt it, because the majority of the population wants is pro-democracy. But if for some reason there is a loss, we could see the US start over the next decade to start to lean towards becoming autocratic, which means it's going to become a dangerous situation for the rest of us. So that's the story. Out of interest, I would say, though, that the inflationary risk continues. I do think that is still something at play for us globally. And remember that is tied, a huge chunk of that is tied to the war with Russia and Ukraine, which then is linked back to energy, as well as obviously food. So we have real ripple effects coming out of this war. And then I was just going to add here, for example, that it is really, I do recommend Ray Dalio's watching it on YouTube, watching his New World Order. The title is very dramatic again, but the idea, the concept that empires rise and fall, and that there are cycles within them, is just worth kind of chewing. It's just philosophically, I think it's a worthwhile thing to take into account. Now, let's move on to this week. So the first thing I want to highlight is that a weekend away, next weekend, we've got the Australian parliamentary elections. That's between essentially kind of towards a 2-party system as well, largely between the coalition and the Australian Labor Party. They're both centrist to my mind, which I think is a good thing. There's right and left centrist, which means they're relatively moderate between them. And there's a little bit of it is leaning a little bit more right, but at least they're centrist. And so the reason I bring that up is we've also got Australian employment change, unemployment. We've got a lot of Aussie news coming out towards the back end of the week. And therefore, for me, I will be extricating myself from all my Aussie positions between now and then, expecting some volatility. However, we do know that the parties are pretty much head to head. In the past, it would have been, we would have been left centrist. Now there's a possibility of a switch up. We'll see how that goes. But just exercising caution, similar when we had these periods up. And then also coming out of the US, we've got retail sales. So a lot of that is how sensitive now because of inflationary risk. And then, of course, just for the rest of them, just keeping an eye on that. Okay, so that being said, let's go across to the charts and let's kick off there. Sorry, just trying to trigger this, and I'm doing this off my laptop while I'm away. There we go. Okay, so let's have a look at the volatility index. We can see here it started to come back down. I actually think 40 is going to represent some form of resistance for the time being, but my expectation is that we're going to see a ping pong between these levels and potentially just continuing to climb to the upside. But again, considering the really big moves we're seeing at the moment, it's unusual. I would have expected it to push outside of that, because we're seeing some of the currency markets starting to break through areas that they haven't in anywhere from like 12 to 20 years. And to me, that would be something that I would have expected to be reflected here, but it isn't at this point in time. So that could be a good thing. It depends on how we want to interpret it. So let's have a look at the US index. So the dollar index is, to my mind, and so let's just kind of enlarge this so that I can give you some context here. It has been largely range bound since 2016 into this kind of orange amber area. Okay, it's got solid candles. It's attempted to break out in the past. There's a bit of a spike here, bit of an attempt to break out there, a spike here going back to March 2020, and that was as a result of the first kind of quarantine, the global kind of shock to the system. Here we've got the candle sort of more deliberate in the way that it's kind of closing to the highs, almost as though it is attempting now to break out, and very well could be. So I've looked at the history, and to me, that the next really significant level here starts to be towards 110 if this is going to be unstoppable. So we will only know in 2 or 3 months, over the coming months, we will know if this is really a significant like change. And I think I need to accept that there is a very real possibility here that the dollar could just keep going, that we might not even see a single kind of a pullback. We might see euro dollar go right down to parity. We could see something we haven't seen. It's not impossible. It's not likely, but it is certainly not impossible. And therefore, we could just see it go as a steam train. However, I have marked this area as an area where the US dollar could still take a bit of a breather, come back around to test the outside of this range for support before resuming its upward trend, or even potentially starting to come all the way back down to the other end. So there's 3 possible outcomes here, and it's really watching over this week and next week what is the most likely to happen. This week, if we see it, I believe, if we see it continue to push past us, then I think the probabilities are high that this is going to be something that hasn't happened in a while. I'm not going to say unique, but something that hasn't happened in a while. We could see price just continue to go. In other words, we could be halfway there. So any positions that, for example, are overexposed might need to be hedged, which is going to be interesting for the markets to see that. And again, we don't even know what the knock-on effect of that is. But if we then look at it in isolation, the daily has started to go a little bit flat on the MACD, a little bit divergent on the RSI, and therefore a bit of a correction here, certainly on the weekly, if not on the monthly, is definitely overdue in isolation. The only thing is we don't know whether we're in new times now, is the way I would put it, or whether we've become overextended. So both are equally, both have the same potential. We'll have to see how that goes. So that means that for euro dollar, it's starting to diverge a bit here. Some of the other Aussie, Kiwi, a lot of those are starting to diverge. They really are starting, at least this week. There is a fair possibility, at least, of some moves to the upside to come back up to test these levels. Have it take a little bit of a breather. Note, please, that the euro dollar is sitting at the bottom of this range. And in the past, whenever it's come back down here, it's bounced back up. But if it does break through this, we're down to parity, down towards these levels here. So we could honestly see that happen. It's not, we have to understand that these kind of big moves, and as ridiculously overextended they are, when the dollar decides it's going to do something, it is unstoppable. And so that is, we had that happen here in 2014. We just saw a significant break while 1300, well, I was going to say 1300 up here was a level. We just broke through that and went through it. And we could basically see just a similar move from there coming down to here or further. We could be in some kind of a new, and at the beginning of a new era of sorts. And so I'm exercising extreme caution with counter trend trading at this point in time. But there is actually some signs showing that we could see a bit of a reprieve this week. Dollar takes a bit of a breather. And so I'm going to take a baby steps. Let's take it a day and a week at a time and see if we do get some pullbacks into these areas, and then looking for trend continuations to the downside. If price just, however, does come back up, break these highs, then my expectation is we're going to start to see a deeper correction, a weekly or daily, but most likely weekly. Looking at the 4-hour candles, they are showing signs at this point in time of very much wanting to have a correction. And I'm seeing that on quite a few of the charts. Looking at sterling as well, now looks very intense, especially now when you look at the Aussie and Kiwi. They're looking much more bullish than bearish, and they do look very much like what they want to do is to take a bit of a move back to the upside, come back in and test these old lows. So I'm just saying that on the table is a very fair, real possibility, at least of the first couple of days of the week, possibly seeing the dollar take a bit of a breather. Okay, but at this point, it could take a breather and they just keep going, or if it is but it is on a cliff edge, and therefore I think that if it does push its way through, there could be a surge, because it could start to hit a lot of orders, and then the weighting will shift, and so it could just keep going. So just exercising extreme caution around those. Next, having a look at dollar yen here, for example. Dollar yen on the weekly is overextended. It could really do with a bit of a correction back down into these old highs. On the monthly as well, it's also overextended back into that. Could definitely do, it's forming what could potentially be a price action here, could be a turning point to come back. So again, all of this could be influenced by the dollar taking a bit of a breather. The yen itself across on some of these other pairs has already taken a bit of a breather. We'll see how that goes. It's overdue for a correction there. Dollar Swissy as well. A lot of these moves are incredibly unusual. They are things that haven't happened in a while. And the good news about it, there is a bit of good news about that, is that we could start to see some really long sustained trends come back to the markets. And even in the pairs like the yen pairs and Swissy pairs, where after interventions in the past, they've been very twitchy. So there is potentially a silver lining here. However, I would say at this point in time that they are really overdue for a correction. We've got a bit of a double top here, breaks below here. I'm looking, basically what I'm getting at this week is, I'm saying I think we're in a new time, and we need, in a new period potentially, and we need to be prepared that these trends could keep going. We could be halfway through them before they decide to, in other words, it's almost like a seismic shift, and then it's going from a summer to winter, and then we'll just have to deal with it at that time. But I'm also saying that there are hints that there could be a bit of, this coming week, there could be a bit of a breather. Dollar CAD, for example, has shed off quite a bit of weight, and you can see that weekly, bit of a rejection of those highs, and this monthly as well. It's tried to break out of that range, and so I'm going to have to see how that ultimately pans out. Let's look at the dollar ruble. So dollar ruble, I'm just bringing in because its behavior is not, strictly speaking, been that predictable technically. Technically, my expectation was that it would stay a little bit further away, and it's come back, and I've got to be very quick to highlight areas where the market's behavior is outside of the usual norms, and you can see here it's really come right back down in towards the previous lows, and so this is not necessarily expected. I think even I'd be interested to know the background behind that. Okay, so moving on to currency pairs of interest here. Euro Aussie, I'm bullish on this. I really like. I'm looking here for bullish signs to see a continuation to the upside. That monthly within a downtrend, but looking potentially to produce a swing low. We'll see if 52.50 as a level can be broken, and therefore I'm looking for price to go back up towards these highs, sort of towards 1.6440, and there could be some nice buy opportunities, but it has to get through the monthly and weekly levels that are here. Euro Kiwi, excuse me. Very nice pullback within that move. Same idea principally. I'm just seeing this a bit of a struggle here on that weekly time frame, but that is what I'm looking for, is a continuation to the upside to see if it can work its way through those levels. Pound Swissy, looking very bullish, really very keen to break outside of this range and push its way back up to 124. So it could offer some good potential day trading opportunities on that. But you know, in the past, I've always said that pound Swissy is a very messy chart, which it is. So always taking that into account with those trading opportunities. Now, what I like the look of here with some of the CAD pairs, they've been pushing and pushing and pushing, but GBP CAD appears to, and it's only one candle in, to be forming potentially a double bottom here, and so it is very overextended on the weekly. I'd like to see a bit of a retracement back up, and on the monthly it started to break through these lows. So again, I'd like to see it is now effectively, now that it's a breakout structure, could continue down to 5,500. However, I'd like to see a bit of a pullback here and again back up to these lines. So you know, all of these really have that potential for some of these trends to keep going. As I said, we could be in a period now where we're going to see extended trends where, although they've already been running for much longer than normal, they could actually not even be anywhere near getting finished just yet. So just being cautious with regards to that. Here, for example, on pound Aussie, nice potential tweezer formation here, just being in a double rejection there on the monthly. If ultimately we close above this as a bullish candle, then my expectation is throughout June, we'll see some bigger moves to the upside. So that's what I'm looking for this week, is to see this daily breakout, and there's some nice day trades up to 82.50, at least in the immediate future. Okay, moving on to commodities. So commodities are continuing, by the way, to form a bullish breakout pattern here. I spoke about this last week. They're still forming it. So far there aren't any red flags coming in. This is still looking bullish. There can be signs of weakness that can creep in with the MACD. They're not there. This is looking as though it could even be this coming week we see a breakout, and if we do that, we'll see a surge up towards 850. We'll see a breakout, and that we'll have a look at which commodities that is, but we'll see a breakout to that. So gold. So gold is, I mean, you can see here we've got a bit of a double top reaction here, and so in that case, it's feasible that gold could work its way back down over time, back down to 1675. It is a little bit overextended to the downside here, certainly on the weekly. There's not really any bearish divergence on this, but it is starting to show some signs of a potential bit of a retracement back up here. For the time being, you know, gold has done this. It's had a big drop and then a green candle, then it pushes back up, and we get a bit of a big drop here. And times when we've had relatively large candles, if it's followed by a green weekly candle, then there's signs of it pushing its way back up. So it could be the case. This one is really tricky to read because gold isn't necessarily trending, obviously, in any direction. So my expectation is that over time, we'll continue to see gold potentially head a little bit lower. I was expecting it to hold at 1834, didn't. It's pushed through that. So the next level down for me starts to head down towards, say, 1800. Which could hold as nice round number, or potentially 1750. But I do think on a shorter term basis, I wouldn't be surprised if it did work its way back up to take a bit of a breather in that downtrend. Silver as well has become overextended. That's a nice little bullish candle there that it potentially implies that it's going to work its way back up and test these previous levels. It's also there, especially a little bit of a nice bullish engulfing candle with some bullish divergence. All of that means it might just come back up to 2186, back up here to test this level, and then continue down. It is still holding a bit of a bearish pattern. If, on the other hand, we end up with a bullish candle, bullish engulfing or something by the end of next week, then it could imply that it's working its way back up to the range, and this just was a false breakout to the downside. Copper as well here, you can see coming back down to the bottom of this range, potentially producing a bullish candle here. So this could just try and attempt to work its way back up to the top of the range, or we could really be seeing a shift in some of the metals and seeing them starting to just fall out of favor, starting to head a little bit lower. Having a look here at natural gas. Sorry, natural gas is getting messy again. Look at these last 4 or 5 candles. It's a bit all over the place. You can see a deep correction here, retracement, and then another big move, and then coming back down and breaking the low here. So this is almost range bound behavior, but this is no longer trending behavior, guys. We've got bearish divergence. We've got a break of structure down here, a breach of that at any rate. I expect either range bound or potential moves to the downside, and therefore increased volatility, and I would just stay away from it. So looking at WTI on the other hand, I can see bullish signs across the board here, looking really nice and bullish on the weekly, bullish on the daily. I expect this to break out at some point soon and head a little bit higher. So that tells me that West Texas crude, and let's have a look at Brent. Brent is the same, coming back up to these levels. That tells me that these are probably the biggest constituents of the S&P GSCI, and therefore they are what is most likely what we're going to see this coming week or next week. We're going to see a breakout and a surge to the upside. We were there before, but looks like we might return back up to those highs. Okay, moving away from energy and on to other commodities of interest. Sugar here is attempting to move back into an uptrend. So again, it wants to take another run at that 20 mark. And so that's looking sort of temporarily bullish, but choppy. Coffee as well, still coming down, but now I think it looks as though it's kind of trying to slow down a little bit. I'd have to see a high here to see a shift in trend on the daily, but buyers are starting to step in here and push back a little bit. Wheat. Okay, so wheat is also going to be a bit of a contributing factor to the global commodities. We can see it's already broken up through its level of resistance, and I think I spoke about that bullishness last week. I'm looking for this at this point now to just begin to potentially work its way up and continue to the upside. So any pullbacks to test this level for support would be interesting. Could be some buy opportunities for me to get in if it is going to head further up. Let's have a look at cotton. Cotton also showing signs of definite, looking at these wicks over here, showing signs of exhaustion and depletion. This is starting to meet its match in this area. So although it is nice and bullish, it is potentially going to shift into a bit of a downtrend. We'll see here. This area is something to watch, adding a bit more risk in terms of continuing to move to the upside there. Okay, global commodities, ladies and gents. So moving to the downside, looks as though it's pretty much, did have a follow through last week. We do have lots of buyers. Remember that as we go down, there's just going to be more and more buyers looking to get in at a discount. The question is, are there enough to form a new tipping point where the market starts to work its way to the upside? But some strong recovery on Friday, let's call it that. It's still a downtrend on the daily. It is still a downtrend on the weekly. In fact, it's almost a bit of a downtrend on the monthly. I'm just a bit cautious of that. So I would still, again, I'm going to need to see breaks of these previous highs, potentially weekly highs or weekly candles, to feel that there's a real confirmed shift in sentiment. I do think, though, there's going to be an attempt to move a little bit higher into the week, and then possibly we might see some trend continuations to the downside. So that's what I'll be looking for. If I just go through some of the others, the S&P, same thing again, looking for price to come back into, say, 4,200 or 41.35, and to see if there's a continuation to the downside. But that's a nice strong bounce off that level, but it might not necessarily be enough to turn around. What I need to see is I need to see May turn into a green bullish candle by the end of the month, or ultimately see it stay where it is and have June into a green bullish candle to be then in line to see a shift in sentiment. Okay, NASDAQ as well, very bearish continuation, but a solid kind of a really good bounce on Friday to get back up. Is it enough to change it? The only way I'm going to know is if we start to break these highs. So I'm just going to mark that, and then that's going to be my benchmark. We need to break up and get above roughly 13,580 to kind of give me, and that's a long way that it needs to go. Look, this was Friday alone, but I need to see a whole week of seeing kind of a sentiment shift. And if that did, that would be a really bullish candle on that. So just going to keep an eye on that and play it as it lies. Otherwise, my expectation is to see bearish candles here and a trend continuation to the downside. There's no bullish divergence coming in yet. And so basically, technically in isolation, this is saying to me, yes, buyers did step in, but not enough yet and the price action has not yet indicated that it's enough for it to be able to shift from a bearish momentum to a bullish momentum. So again here, daily one, possibly this week is to see a push back up towards 1925, back towards 1900 on the mini Russell. But at least it's broken out of its range now sufficiently, which means a turning point from this level, which is now 1.7, which is a previous level of resistance, could become support. But so in other words, I'm still leaning bearish, but I'm obviously keen, just as everyone else is, to start to see some signs of bullishness return, and those would have to present themselves as breaks of the highs. This is great though. So having a look here at the FTSE, that is a phenomenal weekly candle to get. Very, very nice bullish close. If I saw something like that on the US indices, I would see that as a really good positive sign. We don't have it yet, but it's really nice to know that outside of the US, we're not, in other words, we're finding that the US is, well, excuse me, is still, basically, it seems to be a US battle, not necessarily a global battle. This is a good finish. I'd like to see a continuation here, breaking the high of last week, which puts us at 7418. So call it 7419, and to see it start to push a little bit high, even back up towards 7520. I'd like to see it follow through on that. Nice little double bounce there on those candles, looking nice and bullish. That monthly is still going to have strong resistance up there, but that's a great sign. I don't think we're out of the woods yet, just yet. This week will be a bit of a confirmation of that. Will the markets that have been trending like crazy take a bit of a breather, and could we see the equity markets take a bit of a climb, because they haven't really done that lately? So even here, looking at the DAX, that could be a really nice higher low. It's a nice strong bullish candle, closed right at the edge. These candles are starting to show some bullish signs. They're really good. So okay, so kind of coming into it, I'm not as a week ago I was like expecting the markets to head a lot lower. This week it looks as though they finished by the end of the week wanting to see if they can push back up to the highs, and of course that would be great. Euro stocks as well. Really, guys, that's a really nice bullish candle. If we do head higher from here and break this high, that will have been, in hindsight, will have been a really perfect example of a nice higher low. So just a bullish and a close right near the high. That is, in isolation, a great setup. And again, that could mean that if we close higher, we get a really nice green solid candle, especially if we close above 450. To me, that would be a sufficiently bullish sign for me to feel, okay, looks like we might be getting away with this. But the expression, go away in May, or what's it, sell in May and go away. I don't think we're there yet. So I'm prepared. Plan A is for me to expect to see bearish candles here and a continuation to the downside. And plan B is to see price push through that, break above some of these highs, and then say, okay, finish bullish for the end of the week. And that overall would be a great sign. Okay, the Nikkei. So I need to speed this up a little bit because I really don't want this video to be too long this week. Yep, okay, also a little bit more bullish on that one. Let's have a look at the ASICs out of Australia. Okay, not a very strong recovery on this one, but a really nice daily candle closing up above these highs. Nice bullish. Again, similar, in line with all the others, it implies that this week there is going to be an attempt to climb a little bit higher. We'll see if it can climb and close higher, or if it's a climb and then fails and then ends up closing low again. And that would be a clue as to what is likely to happen the following week. Okay, here you've got clear bullish divergence, and price is trying to stay above this level on. We're now looking at Royal Mail. That is, I've been talking about it for a while, but this now looking more and more and more like this week, it would be fair to expect it to break these highs. That's good. That's a good sign. If it can't do it, and then by the end of the week it's tried and failed, then that gives us clues as to what's going to happen the next week. Okay, Amex. So Amex back in this area is trying to stay above that 156, possibly 150 level. That's not a strong hold there. But again, back up into these. So the same as the indices, I expect at least an attempt to push a little bit high. Can it close up by the end of the week, or is it going to get up, bearish candle, and break and run and finish lower? We will see. Apple is going to do the same thing. It's going to come back up to 152, and then we're going to see if it can close above that or not, if it's going to be able to struggle on that barrier. But that at least gives us a sense of possibly this week might be a bit of a reprieve from the strong trends that we've seen. We'll see how that goes. I'm just prepared for that. That weekly candle there, interesting. ARC could be a possible change in, this is a strong trend, but that's the first really strong rejection we've seen at all. Like, in since this year. And again, nice gap up there. So again, can we get close back up above the 50 mark level? And then we will get a nice indecision candle, bullish candle here by the end of the month, and that will also look very good. AT&T is forming a bullish pattern at this point in time. Okay, so again, if everything else holds, it's going to work its way. It's got to break through a couple of things there, but that is forming a bullish pattern. Let's look at Berkshire Hathaway. Berkshire, you can see quite a heavy move to the downside. I mean, like that's 7 or 8 weeks to the downside, back into this level, into this area. Potentially, if it can stay above this previous low here, which is in end of February, it could, and it's the monthly, it's looking really good. So on the monthly side, look, a tap of this area of resistance as support would be perfect. That would be maybe a bit too on the nose. You could have a move down, a rejection, finish with a bullish candle would be a really great sign. Excuse me. Here, However, where it is now to form a bullish candle could be enough of a sign for it to head back up. Let's look at BP. So BP here is going to probably benefit from any big moves on energy to the upside, break through that. Can it get through that level? We'll have to see, but I do expect it to benefit from those moves, and I think those are going to happen. And the same here will potentially happen with Exxon. Can it get past these highs? But I can say that for them, odds are looking good. We've got here Coca-Cola also looking nice and bullish. Look at that swing low, nice little bullish candle. That's a nice solid depletion and a solid break and close. That's a breakout. So that looks like that wants to push a little bit higher. So there are some interesting signs here. Okay, again, we've got a potential bullish indecision candle here. Could be a turning point for General Motors to see the market head up a little bit higher, creeping in, slowing down. If I'm leaning towards this being an attempt to go higher, possibly then we see over the coming weeks another move lower, then we get a double bottom, and then we get a real shift in these things. But let's see what happens for this week as well. JP Morgan as well pulled back into the 50 moving average. In the past, you could see has produced these bullish candles. Nice little area, could do the same thing again here. An attempt to work its way up. Meta, Facebook, depletion, putting the brakes on. It's desperately trying to stay above this 200 mark. That's a bit of a double bottom in its own way. Nice little bullish candle. It's struggling now to follow through on that. Bullish candle meant a follow through, and it failed in both ways. So it's fighting a really big battle here. There's some bullish divergence. It's trying to, I'd like to see it break up above that 235 mark. So I expect a bit of volatility, but it certainly is going to try and move a little bit higher. Morgan Stanley, same thing again. Look at this, just bouncing off this 81.27 level and then breaking below it and trying to get back up above it. So everything is fumbling to stay on the boat as opposed to kind of just off in the water and going through it. Netflix as well, slowing right down, starting to push back up. Bit of bullish divergence creeping in here. So again, big candles to smaller candles to a nice green candles. It's putting on the brakes. Buyers coming back in. There's a lot of signs here, guys, that seem to imply that the market is going to try desperately to push higher, which it hasn't done in the last few weeks. There's a lot of that kind of sign. And we're still in this area. We've got a bit of a bullish rejection of this on NVIDIA. So all of that looks good to me. Again, PayPal, let's have a look here. PayPal trying, doesn't look as strong as some of the others. So again, here I expect it to come in. We'll see if we get a bearish rejection on these previous highs, and then possibly the week after we see it head low, we'll see. Spider, interesting candle there, closed as a doji, so it didn't really go anywhere. It's almost like a hanging man, but a hanging man is generally at the top of a move. Some bullish divergence. Again, some of these, that looks good. That 4 hours, very keen to break that high. Did it do it? Yeah, it just hasn't closed outside of it. That's the plan. They want to push higher. Let's see if they can. Again, here as well. Spotify technology wants to push a little bit higher. Tesla off that level. Look at that off these old highs. It also wants to do that. So we'll see if we're really going to see if they just get their way back up into the old highs and then come back down. And if they do, they could drop faster than they climbed. So it could be a lot of effort for it to get up, and then it just gives back that ground. We'll see. I've put in a new level here at 372 on Vanguard, but I'd like to see it get back up above that. Even really amazingly, if we get a boost right above these levels, that's going to be fantastic as well. All of those, there's some optimism there. Let's look at bonds. As I said last week, putting on the brake, strong bullish divergence. They look as though they want to continue up, but that weekly trend is still down. So any moves up here, we could still, within the bigger picture, expect them to hit a little bit low, but also that single candle there potentially forming could be a nice little turnaround point. Let's look at the Euro bubble. Same thing, bullish candle here. Could just simply be something as simple as the weekly wanting to do a bit of a retracement there. But you can see it's kind of really working its way to get up here. Let's see if it is able to get through and push on that one. Euro Bund as well. We need to see it break above these levels. Otherwise, there's no real expectation of shift in that. Right, let's move on to cryptos. Again, so far, the evidence appears to be that whatever happens in equities has that ripple effect through to cryptos. Not really a surprise. And therefore, I would say that if we get a big boost to equities, we're going to potentially see a boost to cryptos. But this is a really strong downtrend. So for me, again, it seems to me that the most likely outcome is a retracement and then a continuation at this point in time. I don't know if I would call this a sort of inverse head and shoulders just yet. It's not really the classic shape, but it is desperately trying to stay above 30,000. And this week, if equities do that, then cryptos will likely be able to do that. Look at that strong rejection here of Ethereum at the bottom, but it's still within a strong downtrend. So a nice little pullback into these old lows, possibly as far as 2.5 up here to test that level could be the case. We'll have to see how that goes. And it's trying to stay above this, guys. It also hints that if we come back down to these old lows, we could be range bound for a very long time. We'll have to see how that goes. Who knows? We might have something ridiculous like stagflation or something in our future. Could be all. I do think that we are potentially in some kind of a new game now. We need to be aware that we could be in a new game, as opposed to just thinking it's going to be the same old, same old. Cardano, beg your pardon, retracing back up into the moving averages, same thing again, but it's broken down to these. It's coming back down to the old lows, at least with these. If we feel that those are good ones, they've got a good deal going. And here again, we've got with Binance, we're back down to the old lows. So the question is, will these support levels hold? It does look as though this week that it's very fair to say that on the cards, there's an expectation possibly of a bit of a retracement. Then we'll have to deal with how does the week end, because that will give us clues as to whether if it closes near the highs, that's a great sign. If it attempts to close and fails and there's more exhaustion, especially we'll see it on the weekly candle, but if we see it on the daily, we come back down, we're going to see. Then it implies a continuation into the future beyond that. That's it. So for me, ladies and gents, please exercise caution. Consider the idea that we could be into the paradigm of the markets could be shifting. It does this every several years. It looks as though this is a possible shift. There could be some good sides to it, which means new, long, sustained trends in currencies, which we haven't had for the last 4 years. But it does mean if we're counter trend trading, we could be in for a world of pain. So we have to be aware of that and manage our risk accordingly. At the same time, this week, that does appear to be the case. And I've marked my levels, so we'll see which way the markets ultimately go. Thank you. Have a great week and looking forward to chatting to you next week.